If we are flipping a home within a 6-month period, can we do accelerated depreciation on top of fixing costs, real estate commissions, closing costs, etc.? Ooh, can you give them what flipping is?
Flipping is when I purchase a property with the intent of fixing it up and selling it to somebody else, which makes it inventory, just like if I bought some apples to sell in my fruit store.
That is 100% correct, which means think about your fruit store. Do you depreciate the apples in your fruit store? No, they're cost of goods sold. So when you buy a house and you're going to sell it, I bought it with the intent to sell it, no matter how long I own it. I was just talking with a former IRS trial attorney on this one, and we were just sitting here chatting, and he's like, nope, 10 years. If the IRS sees that when you bought it, you were intending to sell it, but it was like the market turned or whatever, and you end up making it into your rental for 10 years, that is dealer property. You can't depreciate it. You can't do installment sales. You can't do 1031s. Even if you held it more than a year, it does not matter. You are a car dealership with a car in the lot, but that car is a house. So when you buy a house with the intent to sell it, you don't depreciate it.
But I've held this house for 10 years. What if I'm renting it out on that, even though I intentionally intended to flip it?
It
No.
doesn't matter. Can't, it's still inventory. That's where they just, and they, there's a number of cases on it. Don't worry, like it's out there. You can go, it's not what people expect. And then there's so much bunk information on the internet about it. They're always like, yeah, hold it for a year and a day and you're an investor. No, it's the facts and circumstances surrounding the purchase. If you bought it with the intent to sell it, you're a dealer, even if you hold it for 20 years. If you bought it with the intent to hold it, it's still investment property, even if you hold it for 2 months, because somebody comes in and offers you an outrageous price, which we've seen. So, so if this is you and you're flipping, we're not doing accelerated depreciation. Besides, you would just recapture at ordinary rate anyway as soon as you sold it. So what it is all those expenses get added into your basis. So if I bought a house for $100,000 and I'm going to sell it, let's say I sell it for $200,000 and I put $30,000 into it. So I add up all my expenses. I have a $100,000 basis. I put $30,000 of improvements. That would give me $70,000 of ordinary income treatment. And I would not do that in your individual name. I'd do that through an S Corp or a C Corp because it would be subject to self-employment tax. And when I say S or C Corp, it could be an LLC tax as an S Corp, LLC tax as a C Corp. Do not do these in your name because what it does is it causes confusion. If I am the IRS, I need to know what Jeff is doing. If I see Jeff flipping properties, or he's a developer and he develops property, and then he has a property that he holds for 20 years, even if it was clear that that was an investment property, I'm the IRS. What do I think Jeff is?
Dealer.
Yeah. And that's what they do. And the only way they know is they come in and do facts and circumstances. And which means discovery, which means digging into all your documents, which means asking you uncomfortable questions and digging in to see whether they can reclassify that puppy and disallow all the depreciation you took. I had a client that bought a property for $4 million, sold it for $7 million under an installment note. The entire $3 million of gain was due year one. The party that they sold it to, this was in 2007, ended up defaulting immediately thereafter. IRS didn't care. They're like, it was $700 and some thousand of tax. Well, I want that money and I want interest and I want penalties. And they went after him. And at the end of the day, it was a loss for him. He ended up with the property back, but that took 2 years. And the IRS says, hey, you got to show you're actually trying to recover. You have to show that it's bad debt before you can write it off. All those things, they make you jump through some hoops. Well, it was 2 and 3 year stretch. I think it was over 3 tax years. So they just got bapped and they never even got paid on that sale. So they had a massive tax hit. They ended up with some loss, and thank God, we were able to carry it back at that time. Like there's probably now, I don't think we can carry back.
No, there's no NOL carryback.
Yeah, at that time we could carry back, but it just stinks. It's just, woof. Somebody says, how can I write off losses from, by the way, I can see the chat and I'm always scanning for ones that that are relevant to a question that we're asking. So they said, hey, I have losses from a flip. I recently sold a home and took a huge loss, about $20,000. I have to take into account rehab, holding costs, realtor commission. How can we absorb the loss in our taxes? Here's the beautiful part. It's an trader business. It's no different than if you ran a pizza shop at a loss.
Mm-hmm.
Or I was running, you know, a CPA firm at a loss. It's ordinary loss if you materially participated. So if you were the one doing the flip, you could write it off
Yep.
against your W-2 income, Sonny. So you don't have to worry about it being a capital loss that's restricted.
Yeah, in regards to some of these other expenses he mentions, the real estate taxes, commissions, closing costs, those also are not deductible as you would think they would be.
They're added to basis.
They're added to basis,
Yep.
both front and back end closing costs. Now you will get to recognize them when you actually sell your flip.
But some people, I know you're sitting there going, I'm cash poor. The IRS is asking for money. Why is this? It's because you've been spending it on things that may not be readily deductible right now. It might be something that's going to be in the future. You may not have to pay tax when you sell it, things like that. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.